All right, good morning, welcome back. This is John from Uplift Trade. I hope you're doing very well and that you are ready to collect some cash from the market. It is currently 8:20 in the morning in Europe, and that's how I want to play the first part of this trading session. So let me go to the 4-hour. There is a growing perspective that the market trend is changing. Yeah, there is no confirmation yet as far as I'm concerned, because we would need to have price take out this high here on the 4-hour chart, currently sitting at 113,485. Until that high is broken, as far as I'm concerned, the 4-hour trend is still down. And now the 4-hour trend is contracting within the perimeter of the moving averages. Notice the recent behavior of the candles above the moving averages. Above the daily 12 and 21 moving average, we had several closes above. Ever since the beginning of the downtrend that was started on the 14th of August, price had never spent one or two closes above the 12 and the 21 daily moving average on this chart. And now this is happening, so it indicates a break of the previous pattern. It doesn't mean that we're going to go up and rally, perhaps we will, but so far the sign says that the downtrend is fading. Now, let's call it like that. Now, if the downtrend is fading, we would prefer to go long on the trading days. But sometimes there may be opportunities to take a contrarian approach and go short. And that's what I will be playing perhaps on the 5-minute. The way I look at it, so I drew on the 4-hour a higher extremity of a range, a lower extremity of the range, and a midpoint. Yeah. Every time price made a deviation above one extremity, so in that case, the high boundary of the range, technically you can reasonably expect price to visit the other extremity of the range. So in that case, the lower extremity. That did not happen. That's a sign. That's a sign that either it's not a range or there is buying pressure. Yeah, price doesn't have, or should I say buyers are not willing to let price reach the other extremity they jump in before. Yeah, that could be an assumption. Here is another example. You make a move above the high extremity, you get back inside the range, you expect price to reach the other extremity. But perhaps what is causing this is the presence of the 12 and the 21 moving average. These are highly sought after indicators. I like them. In that case, they function well. So now you can see that the 4-hour 12 and 21 moving average has been holding price, has been acting as support since the 6th of September. On the 4-hour chart, every time we will have price reach the 12 and the 21 moving average, even if it dipped below, it's perhaps a good opportunity to position for long. Yeah. Now, how I would want to play this is the following. If I look at this move right here on the 5 minutes, there is something that catches my eye, and that is this sort of contracting triangle. Remember, I never use ascending or descending trend line to enter or exit position. I use them for visual recognition, and this is what I'm doing now. This looks like a contracting triangle, and a contracting triangle is a corrective pattern in Elliott wave theory, and that happens as a wave 4. If that is a wave 4 in the shape of a contracting triangle, then the following move is the 5th wave. 5th wave is the last wave of an impulsive move, whether it's to the upside or to the downside. What follows after that is a corrective move, an ABC. In our case, we would have an ABC to the downside. So 3 wave to the downside or 5 wave to the downside for wave A, 3 wave to the upside as a corrective move for wave B, and a 5 wave to the downside as an impulse for wave C, forming an ABC as a wave 2 correction. So in that case, that correction will be a pullback to the downside. Perfect opportunity to either take a contrarian approach and short during the pullback, or I will be looking at positioning myself to the long side towards the end of this ABC correction. So right now, I have no idea where is the correction gonna go, how far it will go. I can plot some retracement. So yeah, if that's a third, if that's a fourth, a fifth, then we look for wave 2, and wave 2 usually retraces at least 50% of the entire wave 1 move, and generally the 70.2% or the 76.4% is a good level. Now, if I look on the 4-hour, these two levels, 70.2% is right at the daily 21 moving average, right here. Perhaps this 21 moving average is going to act as support. So that's my observation. That's the play I want to go with. So perhaps now we have the top of the wave 5, and now we will be looking for wave A to form as a 5-wave impulse to the downside, as a diagonal, or as a 3-wave structure. Yeah, so for now, that's the play. Let's wait and see how price action develops. All right, it's been a little over an hour since I posted the recording, and price has made its way a little bit higher. I'm still of the opinion that this is a wave 5 and it's looking like an ending diagonal. And so looking at the 4-hour chart, 23 minutes to the close of this candle is getting very close from the high of the previous 4-hour swing high, and also very close from this swing high here, resistance at 113,470 or 75 and some change. So what I'm gonna do, I'm gonna aggressively start to position for a short with a quarter of a contract at a time. I have the volume that is somehow decreasing, and I have the RSI who made its way back into below the overbought area. Price is making new highs, the RSI is dropping lower, and right now I can see on the tape almost 40 contracts were aggressively sold at this level. So it's not excluded that price makes a run to the high of this candle and perhaps to this resistance overhead at 113,485. So I'm gonna go right away and position for a quarter of a contract to the short side. I'm not putting stop loss yet because you see this liquidity void here. It's possible we get into it. It doesn't have to be. So I'm gonna build up a position for a reversal as a pullback. Remember, I'm still of the opinion that this is an extension of a wave 5. That was the wave 4. And it's not uncommon to see the pullback for a wave 2 correction to get back into the mid of the wave 4. Yeah. So that's my observation. That's my position for the moment. Let's see how this develops. A little bit over 15 minutes later, price has made its way very close from the higher boundary of the range. So it appears that the pullback I was counting on is unfolding. There is no confirmation that we are indeed going to reach this level here, but at least the pullback is working out. So remember, we're looking for an ABC to form ABC. The A leg of that correction can be a 3-wave to the downside in this case, or a 5-wave structure to the downside. 5-wave can also be a diagonal, so it doesn't have to be an impulse, it can be a diagonal. So we'll have to watch out what is happening. Out of capital preservation, capital protection, I will put a stop just above this high here. Yeah, I take the risk of being stopped out in a formation of the B wave. So it's very possible that the B wave, once the A wave is complete, it's possible that the B wave will take the former high. In that case, we will be in a flat correction. Yeah. But I'm willing to take that risk. It's 14 bucks, and I will be able to reposition on a short more aggressively if we make our way lower after forming the top of the B wave. But so far it looks good. We have a little bit under 11 minutes for the close of this 4-hour candle. If I look at the volume, it's good, but it's not amazing. I would have liked to see price climb through the former high on the 4-hour charts as well as the resistance, because I would have positioned for another quarter of a contract and perhaps a third one as well. But it is what it is. Currently the position is in profit, and I can see that on the 5 minutes, this candle, which closes in 20 seconds, is making an attempted reversal. There is a ton of volume on this candle compared to the previous candles on the way down. So what I'm gonna do, I'm gonna exit the short. I will lock in small profit for now, 66 bucks. I'm gonna add this to the books. And the reason I'm leaving the short is because I expect price to make a new run higher. And I don't want to be stopped out. So 66 bucks is still 66 bucks. Yeah, so let's continue watching. All right, a quick update. It looks like price is attempting to complete a wave 2. So we have wave 1 to the downside, wave 2 as an ABC, perhaps. So I'm still looking for shorts. I'd like to have price run a little bit higher than that and position for a short towards the end of this, what looks to be a wave 2 correction of an A leg of an ABC. I hope you're following. So let's see. If price makes a run higher, I will take a short. Now, okay, so I'm maybe taking the short. What is interesting to observe also as part of this overall trend, since we have started watching early morning, price has pierced through the 21 moving average on the 5 minutes, but closed in between. So there was an attempt, perhaps this was just a take profit on this particular move, and now we're gonna make a run higher. So there is no indication that this move here has completed 5 waves. This to me looks like an extension of a wave 5 with an ending diagonal, but I can be wrong. And I like what I'm seeing right now on these last 2 candles. So we have 3 minutes and 40 seconds on the close of this 5-minute candle. If it stays like that, it's good for taking a short, because we might be on the verge of the third wave of this A leg for the correction, and the third is the most impulsive one, so perhaps down to this liquidity. So let's see. All right, we have a close of a 5-minute candle. I like the 2 weeks to the upside of those candle, and the fact that the price is just resting on the 12 moving average on the 5 minutes. So I'm going to enter a quarter of a contract to the short side, and I'm going to immediately position for a stop, because if this high gets taken, then we're not into a wave 2 correction, because wave 2 cannot take the starting point of the wave 1. So at least this will be a loss of $68, but I think that price should resume to the downside, perhaps make another attempt at this low here. So let's see. So the way the price action is being printed at the moment encourages me to position for a quarter of a contract on the break. So I'm going to zoom in on the break of this candle here, this one, this particular candle. I am still playing the fact that price has made a wave 1, a wave 2 correction as part of the A leg, and now price is starting to create the third leg. When this quarter of a contract sell stop is triggered, I will be in for half of a contract position, and I will carefully watch my stop, perhaps lower it to the top of this, because I expect it's very possible that this correction we are in is just a pullback in the overall trend, and if that's the case, then it will happen perhaps swiftly. I might be taking profit somewhere there if we get there. Yeah, so let's keep watching. All right, my sell stop was triggered. So now the position is half a contract. 112,978 is my entry for the position. The stop loss is $160. I'm not lowering the stop yet. I will probably lower it if price breaks this low here. Yeah, so that's my play for now. So looking at the current price action for the last 5-minute candles, I'm gonna add another sell stop for a quarter of a contract underneath the low of this bullish candle here, right here. So another quarter of a contract on the sell stop at the low of this candle, because if this low gets taken, then it increases the odds that what I'm playing since the beginning is actually what is happening, and that is the third wave, the third impulse wave of this A leg for this ABC correction. Yeah, so let's keep watching. All right, I'm gonna add the impulse that I'm watching for this ABC correction. So we have wave 1, wave 2, apparently complete. Now we'll be looking for wave 3, somewhere down there, wave 4, and then wave 5. So that's my plan for this particular short. Of course, this can be wrong. What I just saw here, 20 contracts on the aggressive buy side at this particular level. So on the break of this 21 moving average on the 5 minute. Let's see how this candle closes, but there is perhaps some buyers sitting down there. All right, so my third sell stop quarter of a contract order was triggered on the break of this candle, of the low of this candle. So now I'm in the market for 3/4 of a contract. I don't think I will be adding another quarter of a contract to the position. I will leave it like that. What I'm going to do right away is lower my stop to the assumed end of the wave 2 correction. The stop loss is at $180 and expected target. We can have some fun, draw some extension. So let's see. Wave 3, where would wave 3 perhaps go? Look for the 1618. Yeah, right here at 112,316. That would represent, if we get there, $470 profit. Yeah, but that's pure speculation. It's good to have in mind. Let's keep watching. I said earlier I would not be building a complete position, meaning one full contract on this particular short, simply because we're in an uptrend, and very often in an uptrend the pullbacks are rather shallow, and I don't want to get trapped in that. But the recent price action, especially on the 5 minutes, hovering around the moving averages, is giving me another opportunity to add a sell stop order for a quarter of a contract underneath the low of this candle. And if this one gets taken, so I will be in for one full contract on the short side, but I will be lowering my stop right away under this high, just above this high, just to be sure. Now, I realized something else also as price developed some micro range here around the moving averages. Initially, I'm looking for an impulse to the downside as part of the A leg of an ABC correction. But what can very well happen is that this ABC is partially finished. We have the A part, we have 3 to the upside for B, and now we are doing the C legs. And it's very possible that the C leg will come short of this, of the low of this candle. If that's the case, then I will be very quick to exit my position, because I don't want to get trapped into a reversal. So I have my finger on the trigger. Right now, I'm still in for 3/4 of a contract, and perhaps on the next recording update, I will be in for a full contract with a stop loss lowered above the high of this candle. But let's keep watching. A few minutes have passed since I last paused the recording, and I'm going to take out the drawing of the impulse to the downside, because the current price action does not reflect the shape of an impulse. We have something that looks like an A Now the question is, do we have a B to the upside? And are we doing the C? I don't think so. This very much looks like a triangle for the B leg, where you have your A, B, C, D, E, and then you move down. So let's keep that here for now. It doesn't change the fact that the short appears to be the right play, but the structure of the price action does not fit anymore the impulse for Elliott wave. Perhaps it's a triangle. If it is, then that triangle will represent the B leg of this ABC correction, and then there should be some move down through the C leg. So let's keep watching. And so it looks like price action is working on making the E part of this triangle. And if that's the case, then I'm gonna just move my sell stop order under the low of the D part of the triangle, so that when E is complete, if that's indeed an A, B as a triangle, then the C leg should take us down and should take my sell stop order with it. So it looks like the triangle as part of the B corrective wave of this ABC is playing out. We had price make a small run up for the final part of this triangle. So if that is correct, then we should be looking at a C leg. Let me put the extension just where the B wave finishes. The C leg should go, we can look at 112,508, but I would put a bet on 112,179. So that would represent a profit not too far away from what I was looking at earlier, 759. Yeah, so that would be the profit. Now it's critical to see how the down move shapes itself. I would not want to see price come close to this low, take the low, and then revert back with some volume. That would indicate that the C leg is probably not going to be as deep as I thought it would. But so far it looks good. The trade is in profit, so I'm going to move my stop like I said I would, and I will put it just above the high of the E leg, just to be sure. Currently, it's a protective stop that represents a loss of 114,000 with a potential profit of over $700. But the trade looks good, so let's keep monitoring. All right, less than 10 minutes later, price has made its move to the downside, and price broke the low of the A leg of the correction. So we have an A, a B as a triangle, and then now we're doing the C leg. I'm looking at the volume. The volume is picking up on the way down. These last 3 candles, the volume is increasing, which is good. Price has tapped the liquidity voids. I'll be very quick to manage my position. Perhaps either I exit everything at once, depending on how price volatility shapes itself, or I will, if we have more of a gradual grind to the downside, I may be looking at taking partials out. Right now, I'm in for a full contract, so this is a full position. The 112,929, and the stop is still above the high of the E leg of the B correction. So right now it's looking good. We have some minor reaction on this particular level, 112,627, and the volume is how many minutes? We have 4 minutes to the close of this candle on the 5 minutes, 9 minutes on the 10 minutes. It's very possible that this level here, which is the high boundary of the range, 112,575 and some change, will provide some reaction. After all, this 4-hour candle that was generated with this upward movement did not retest the level of the range, the high level of the range. So perhaps this is what's going to happen. Now, I would not be phased out if price got back to the moving averages for a retest and then plunge back. I would not be phased out, but I will keep an eye on it. Somewhat 15 minutes have passed since I paused the recording, so like I was saying, I will not be phased out if price makes a run up towards the moving averages on the 5 minute, which is what happened. I'm still in the position, I haven't changed anything, not even moved my stop. I'm very curious to see the price reaction on this former high boundary of the range, because we had an attempt at breaking through, it failed, rejected by the moving averages to the upside, and now we're making our way lower. Price should be breaking the low of this candle here. That was made at 12:30, so it's about 20 minutes earlier. So let's see how price develop, but the position looks good. It's currently in profit, $259. The risk is 117. Let's keep an eye on it. All right, so it looks like the correction was not over. I thought this would be a 1-2 and then a move to the upside. So I'm going to enter a short again to capture the last part of the move. Since I don't know when exactly the last part of the move is going to take place, I'm going to be very conservative with my stop loss above the high of this candle. As soon as we break, I want to capitalize the maximum of the gain. I think I will be pressing onto the position if we move lower. So I'm going to put another quarter of a contract. That would be in for 3/4 of a contract towards a low, which is not a smart thing to do. However, I expect price to tap into this liquidity void. We have 1 minute 30 seconds to the close of this candle. as well as for the 10-minute and 41-minute to the close of the 4-hour candle. So let's see how price action reacts. It's unlikely that there is a third attempt at testing the low and that attempt fails and price reverts. It's most likely that we may have a breakthrough. So let's keep watching. Somewhat 10 minutes later, the low has been broken. Now what I'm looking for is twofold. First, I'd like to have my position refreshed because my sell stop for a quarter of a contract was underneath the low of this candle and price made a run through. So I should be in for 3/4 of a contract on the short side. And second thing I'm looking for is to have a bit more volatility or dynamism within the tape. Right now, the exchange transactions are rather slow. They're rather slow. One thing that is not making me too confident about my decision to jump back in the short towards the low is the absence of volume. Like we make 2 consecutive new lows, and every time the volume is lower than the previous candle on the low. So the stop loss is in for $112. I'm not lowering my stop loss at the moment. I'd like to see some more follow through. Perhaps once we touch this level, the former high boundary of the range, there should be some activity. So let's keep an eye on the position, but so far it looks good. But I will be very quick to exit the position as soon as I see volume getting in on a low, or I see a reversal. Let's say if price makes a new high compared to the high of this candle, I'm going to highlight it here. I will be very quick to exit my position because it doesn't look very promising. All right, let's keep an eye on the price action. All right, price is making its way lower. I'm gonna lower my stop loss because like I said, I am not very confident about this move. I don't think there is a possibility, let's just put it like that. There is a possibility that this move does not get as low as I thought it would be. Right now should be a telltale sign if there is some acceleration within the tape. So let's keep an eye on it. All right, the acceleration I was looking for in the tape is happening. We broke through the former high of the range boundary, and now price is making its way through the liquidity void I was highlighting earlier. So perhaps we have a run down towards the 1618. The 100% extension target that I was looking at was taken. So we have some aggressive buying here, a 13 contract on this opening of the new candle. I'm not going to be phased out if we see price get to retest the former high of the range, but this is looking good. However, I just noticed that we have a new 4-hour candle. So during 4-hour candle, whenever they open, it's not uncommon to see them retrace a portion of the previous candle. And so in that case, we would have price make a run high, and I don't want this to happen. So I'm going to be very quick to exit my position. My stop loss is still at $49. I will leave it there. Otherwise, I would usually move it on break even because that corresponds to, actually, I will move it to break even, a little bit over break even. $24 in profit. So even though if we have a sharp reversal, I'll be locking in for $24. But now I'm looking for price to accelerate the move down towards, whenever you have a wave 4 triangle in an uptrend, in an impulse, as soon as the 5th tops, you then have an ABC, and that ABC correction is a wave 2, and wave 2 tends to reach or finish near the mid of the wave 4 triangle over lower degrees. So technically, in our case, that would be an end of this downward cycle towards 111, call it 112,000. So let's see if this happens. Right now, it looks good. So I'll keep an eye on the position. It looks like I was not quick enough to exit the position after we broke through 112,000. I am being stopped out for $24, unless, yes, I will be stopped out for $24. So $24 on this third trade in the books for today. That was an interesting trade. I like the fact that there was a possibility to identify an Elliott wave correction, so an ABC with the triangle as a B wave. And right now, so there is no indication that the correction is over. I'm just being stopped out, so that's fine. I'm not going to try to re-enter short. It's 2 in the afternoon. I will have to leave the house in like 20 minutes, so I'm done with the trading for today. So thanks a lot for watching. You take care of yourself, and perhaps, depending on price action, I'll make a new video tomorrow. You take care. Bye-bye.